Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Wednesday, November the 13th, 2024. And I'm going to start here on the S&P 500. I'm on the hourly chart. There aren't any real changes to make in terms of how I'm labeling or where we might be. Now, that part's getting a little bit confusing, where we might be. But I still believe that we either have completed this fourth wave or we're still within it, and it is extending out as we have seen in other periods, of the market where we're just seeing a fourth wave, i.e. right here, just get stretched out and played out and just continue to where you think it's over, then maybe not, then you think it's over, and then it's not. And so and the patterns get strange as we go along. Now, granted that, and this is what I believe, I think I saw this on one of the news services, that the market has been enjoying a Trump pump, which is due to the result of the elections, and so should we be expecting a Trump dump? And again, not being political, just saying what I read. But then when I look, and I presented yesterday, that the market could have, I had an alternate that at this high, which was a new all-time high, up at 6,053, basis the S&P, the futures market, that could be the completion point for minute wave 5, minor wave 5, intermediate wave 3. And that we are beginning to come down. Now, the pattern itself is not suggesting that. I have to continue to add that. But that doesn't mean that we just suddenly start to really fall quickly. Because if I put it into place, this does appear to me to be, an ABC down, a 5, 3, 5 down. And this seems to be 3 up. And then we come back down, and then we go back up and break it. So how I'm going to leave this for right now, because it's got to be the market that's going to make this clear, that I moved the fourth wave over. Tiny little bit of a failure over where we're marking wave A. I don't think that is substantial or that far, out of the picture to not allow. So if that is the case, then we got 1, 2, and we must start to rally. Now, every time we get that, like for example, this morning we got the CPI, the market decided to like it. It kind of hung out up there until we opened. And then they drove it all the way down, all the way back down to the area of yesterday's lows. So again, I was like, okay, what are we doing? And then I thought, okay, we had that possibility where they could drop it and create a new low. They didn't. They raised it back up and then take it above the high for CPI. So again, I think the market is really tossing out some very confusing messages. Now, whether that is just the options flows, whether that is just this end of year where we saw, for the first couple of days that Apple was getting trashed. Now, Apple, had a lot of capital going into it today. We saw Tesla kind of peak out, start to come down. Yesterday it was already down quite a bit. And then today, playing up and down all day long. So again, the SPX ends in the positive. The ES ends in the positive. Most, but we're seeing the Dow finish okay. The Russell start to come off. The NASDAQ start to come off. Some of the stocks start to come back into negative readings. So it's going to remain confusing. And again, like I said, it truly could be a part of year-end posturing. So how am I going to leave it? Just as I got it done. That the wave 4, I'm moving it over. Now, what that does imply that this market really cannot come back down. It should not break below 59.89, or for sure should not break below 59.87. Now, when it starts to do that, well, then we're in danger. So what I've tried to do is leave it here at 59.25, but I can put one additional on that we can include, because if it starts to really come down below here, below 5,900, 5,921, 5,900, it's really beginning to lean that wave 4 is too big. If this is wave 2, this very small here, then this is already looking like it's too big for a wave 4. So what else could it be? Well, I'll go one out, which would even put more bias to the market of what it needs to prove. There have been some that have suggested that this whole move is wave 1 up out of 5. And if that's the case, and this is a wave 2, well, then we're looking for it to come down further. In fact, we could see it come down between 50 and 68, 62%, let's say, 618. And that's all the way down to here. And then turn and run again. Now, there's a lot that the market has to continue to digest on a daily basis as all of this start to get put together. And with the transition, with all the things that are going to be happening, with, the Senate, with the House, with getting everything passed, with any changes that are going to come in, with any economic policy that has to be stated, with, are we going to get these tariffs immediately? What's going to be happening within the different departments of our government, and what kind of effect will that all have? So again, a lot of stuff going on, and the market will react, because if anything that's going to be affecting how business is done, how money moves around, how things, including interest rates, may start to get affected, how cutbacks will start to do damage to how we do business. So we got a lot to consider and a lot to put in. So right now I'm giving the benefit of the doubt that the market still has a minuet wave 5 up to complete, which will take us to new all-time highs. Now, with the slight adjustment there, it still pretty much leaves our levels where wave 5 would be 100% of wave 1 at 6,078. Then we have this much cleaner area where minute wave 5 would be 1.618 times the length of minute wave 1, and that is at 6118. Now, I look at that number and I go, like, is it possible? Of course it is. But something has to truly make sense to the market to continue to buy it, to continue to push the market higher. And if you'll notice, this thing has truly run out of steam. Now, I'm not sure how it's going to get its quote unquote mojo back. I don't know. We don't really have any earnings of size until NVIDIA. So again, I got to take it day by day. Now, if we start to come down again and we break below 59.89, we break below 59.87, then our next support is 59.25, and we've got the hourly 200 just above that at 59.56. If that fails and we break below the hourly 200 moving average, then I'm going to say that truly we're likely going to begin to tumble a little bit faster, because on a moving average basis, we don't have anything. And if I take it up and we take a look at the daily, by the way, I'll show you what those yellow lines that I put on. I'll talk about those in just a moment. When I look at our moving averages here, the 200 comes in way below. So hourly, it starts to spill. If we break that level, it starts to spill. On the daily level, it's when we start to break below. We haven't even really broke the daily 8. The daily 8 is a 59.68. If we break this one, start coming down there, it should break that daily 8 and pretty much move us straight to that fib, if not lower. Then on a moving average basis on the daily, our next line of defense, of support, is going to come in at 59.05 or 5900. and I'm leaving it at 58.91. If it starts to break there, well, then we're getting clearer signs that this is likely not going to result in a move up. I mean, even down into here, it's just much too big. But then we're going to be saying this could be a possible wave one. So there's a way to spin it and keep it positive, but I think we have to look at both sides realistically to see what's caving, what's giving up, what's turning. So again, without attaching any politics to this, because I really do not want to be political on this. I don't think the market needs to be political on this. But if I'm considering that I'm looking for the intermediate third wave to complete, what comes next is the intermediate fourth wave. Now that's where these come into play. And as I said, the expectation would be that it comes back down into and towards the bottom end of the fourth wave of one lesser degree, which is the minor, and here it is here. So 236 is 55.19. 382, which is the most common, is 51.89. We're sitting at 6,021. 51.89 would be a pretty quick and nasty drop. And I do think that it could come quickly, as we saw from off of the July 16th high here in the S&P to the August 5th low. It wasn't even 4 weeks. It was more like 3. So in 3 weeks, we dropped pretty harshly. So what happens if we drop in 3 weeks and we end up back here or here? That's going to be even more severe. A lot of things are going to happen to kick it into gear. One thing that I have noticed, by the way, more to do with the spiders and the Qs, is that I've talked about it before, where I start to see the levels, I start to see put walls, call walls, volatility triggers, and these larger gamma positions get tighter. So the range is tighter. Particularly I saw it in the spiders today, the Qs as well, but the spiders more. Where the call wall is at 600 and the put wall is at 590. It's just 10 S&P spider points. That's not. It usually is a lot wider, where the market has a lot more room to kind of fluctuate in between as it chooses. So when I start to see that, I'm like, is the market getting nervous? Is the market tightening things up? No, I don't know. So again, I'm putting that all together and realizing I need to talk about what if. And that what if would be is that where I've marked as minuet wave 3 is actually the completion point for minuet wave 5, minor 5, and the intermediate 3. And we are on the way. Now, here, still kind of not looking all that bad on the daily. The hourly, even the 4-hour, I can bring down here, it's not actually looking all that bad. So we're going to give it the benefit of the doubt that whatever's going on, they're working it out and the market's going to continue and resume. Now, tomorrow we have PPI and also initial jobless claims. Let's see how they deal with that. And we'll pay very close attention to these levels. Again, hourly 200, if they start to break, I think we can do a little bit of a free fall. And we'll see exactly where the levels are going to come in for tomorrow. So each day, because we have 0 DTE, a lot of gamma, a lot of things can switch, excuse me, and change accordingly. All right, let's go over and take a look at the NASDAQ, which to me even had a harder time getting itself together. And when it did, initially we had all of this and a lot of it here at the end based on Tesla's gains. And then towards the end, we saw NVIDIA making its play for 150. It's still today, this morning, it was trading 149. Suddenly it's down $2 on the day. Well, what happened to that energy? So, excuse me for the coughing. But in essence, When you go and you look at actually what's trading, don't forget, as these trades happen, the dealer, who's ever buying or selling these options, hedges. So again, that creates the moves. Maybe they are kind of coming in and they're starting to put puts underneath all of this. They're starting to swing out of these calls. They're starting to short the calls above. Again, that's going to change the gamma structure. That's going to change how these things line up. So I think we've got all of that coming into motion. And it's making it very confusing because on top of all of that, we are in the midst of year-end posturing, starting to prepare for year-end. And what are you going to keep? What are you going to switch? Money goes here, money goes from there, money moves over here, etc. And we continue to see that at least the long bond continues to decline. That says that rates are moving higher, yields are moving higher, not by the Fed, by the market. And when you really kind of take a look at like the Fed funds, which is the 30-day, and they have to hold within where the Fed's target range is right now. But when I see you see the inversion starting to flip. And that's kind of what we look for in the current atmosphere, but things can change. That's my point. Things can change. Back to the NASDAQ. These moves were not, again, they were not easy to trade. And the reason is, it's like, okay, I'm looking at an hourly chart and you're like, oh, yeah, that looks pretty good. Okay, we went up. That was CPI. We came down. Why didn't you just short it and hang on? In options, it's possible. In the future, the intra-hour move, the intra 5-minute move, the intra 2-minute move, it was flipping and flying $5, $10, $15. And NASDAQ, it's $20 per point. And if you have a one lot, suddenly you're up $200 and now you're down $400, or you're down $500. Now you hold on to it and you're going back and back. You must adjust or figure out how you're going to do this, because you have risk and risk profiles have to be followed. So trading wasn't as easy as one would imagine. Now, not impossible, but again, your account size really made a difference. So day trading presented its own challenges today. Swing traders, a little bit different, because swing traders are a lot. You can find them in the NASDAQ, you can find them in the S&P, but more I find swing traders are over in the stocks. And that's a little bit different than trading a future. So, which actually is comprised of, in the case of the NASDAQ, 100 stocks, one of which was going up really heavily and then came down, while 2 or 3 of the others went up real heavily and then came back down. And then others were up and then were down and then continued to go down, etc. So becomes a little bit. So getting down to the Elliott, I did the same thing. A little bit of a failure, but not by much. This low was 21,056. This was 21,054. So I moved the 4 over to here. That's not bad. That's what I like to see. Give me a nice rally up and off of that. Kind of giving me a little confirmation that the low might be in. But then they did this. Right? Yep. After hours, they're buying it. And they still have 4 minutes, but it's still down on the day. But the other thing that I'm seeing, folks, gold down on the day, platinum down on the day, silver down on the day, crude down on the day. So there's a lot going on. 30-year, 10-year treasuries down on the day. So there's a lot of posturing going on. Now, what I've also added here is that additional, that for wave 4, yep, that's going to be correct. Now, that we have from that low for wave 2 up to that high for wave 3, and now we're coming down. So I think that's that got to be, because it's a little bit different than what I had, isn't it? So it's moved around just a little bit. And that we had, before we had right in here, that we had 21,050. And that would have been 236. So let me add that back on. And let's see. Yeah, I was even much higher. 200,090. So that one I took off. And let me do that again to get it out there. So I may have done this differently before, to be honest with you, because I do remember they were up higher. But now they're here. So 382 is down at 20,935. And I believe that I had them up higher before. And I'm going to have to take a look at that to see what I changed. Now, unless I was doing it from here. You know, because this is the whole third. I may have marked it from there. Let me stay with me 1 second, because I got to see what did I do differently. No, it wasn't that one. I don't know. I will try to find out. I'll go look at my chart from yesterday in the recording and see. But these are the support levels now. And again, I think we really start to come down and break below 20,900. We're starting to get into a little bit of danger zone. Now, once again, if I'm just going to go by the fact that this is wave 1, then as a wave 2, you got these two in motion. If this whole move is just wave 1 out of 5 going up, then this is all part of wave 2, and everything else remains alive in terms of that we really pick up the speed and go back to the upside. So we'll keep both of those in, plus the other alternate where that would be wave 5, and that would come into play. I can go to my 4-hour, and here we have them. That is 236. This is 382. And if this completed minuet wave 5, minor wave 5, intermediate wave 3, instead of up in here, well, then here's our lines. Here's our markers. 18,839, that just gets us into it. It's usually towards the low of it, and that's 17,580, but here is the 382 on an intermediate degree, 17,293. So again, those levels are real, and they are fitting, and now we're just waiting. So that alternate stays alive for right now. What I'm looking for is if this did complete it, that's wave 1. This is wave 2. We go. If we still bounce around and we come back down again, then I'm going to have to say A, B, C, A, B, C, B. Then I don't know what this is. If this is not C, then I'm not sure. I'm not sure anymore. And I'd have to go in and really take a look at it, because then we're into the WX and the Ys, and there could be doubles in here. And so I will break it down. But right now, I'm putting the 4 there, and I'm looking for this market to continue to move higher, and we still have our levels up here to where it can get to. So right now, I'm still betting on the market is going to go up and finish additional new all-time highs and finish minute wave 5, minor wave 5, and intermediate wave 3. All right, so moving averages on the hourly. Excuse me, we broke below the 50 today. In fact, we closed right at it. The 50 is pretty flat. Oh, come on. The 50 is very flat. Shows the 20, shows the 8. All kind of getting flat right in here, right where the market headed and stuck. The 200 is down below, just underneath 20,935 at 20,929, I'll call it. Starts to break there, it's the same story. We get a lot of free air here, kind of like what I call a black hole. And on a moving average basis, I don't have any more support, at least on the hourly. Move it out to the daily, we'll do the same exercise. We're going to take a look. You can see it hasn't still, like in the S&P, hasn't broke the 8. 8 starting to kind of crest. 20 still heading higher, and so are the 50 and the 200. So on a daily, it doesn't look bad, but this is 3 down days. So is 4 complete? We're going to find out. Tomorrow, we have initial jobless claims and PPI, both at 8:30 a.m. Eastern. The next Elliott Wave Daily Update will be on Thursday, November the 14th, excuse me.